From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's exchanges and clearinghouses around the world. And now welcome inside the Ice House. Here's your host, Josh King of Intercontinental Exchange.
A year ago, almost to the exact date of today's recording, we spoke with Joe Tyrell, president of ICE Mortgage Technology, on how he and his team are on a mission to digitize the mortgage experience. You know, that cumbersome process when you think you're going to buy the home of your dreams, and before you get the keys to the new place in the palm of your hand, that hand gets worn to the bone by signing an 8-inch high pile of paper documents that's then FedExed to all the parties and stored in a warehouse or a basement somewhere. The process can go just about completely digital, saving so much time and money for participants as you electronify the workflow from end to end. Now, since that conversation that we had with Joe, we've continued to work closely with the entire team at ICE Mortgage Technology, and I don't want to step on some of the coming announcements from our colleagues over there, but 2022 is shaping up to be a watershed year to bringing even more automation to the home buying process. In a recent ICE Mortgage Technology news release, the focus was on a tipping point that saw purchases make up 51% of closed mortgage loans, the first time since 2019 that purchases have outpaced refinancings. To quote Joe in that announcement, these numbers are a testament to the strong and resilient demand for home ownership and the demand for ICE Mortgage Technology's digital solutions. So our guests today, Guild Mortgage Company's CEO Marianne McGarry and its president Terry Schmidt, are not just veteran leaders of the industry who are clients of ICE Mortgage Technology, but they've recently completed an IPO on one of ICE's exchanges. They both join us inside the Ice House for a conversation on Guild Mortgage's success, the current state of the housing and mortgage markets, and leading a company through a technological revolution. Our conversation with Marianne McGarry and Terry Schmidt is coming up right after this.
The transition to electronic trading is gaining support in fixed income markets, presenting opportunity and driving demand for data. At ICE, we're a leading provider for fixed income data and analytics. We offer a comprehensive fixed income execution solution via ICE Bonds, committed to execution quality, transparency, and information. We provide a wide range of platforms with deep liquidity pools that support multiple trading protocols. Our fixed income indices can be tailored to your investment strategy, powered by our data. Our ESG data offers increased transparency into fixed income markets. Access the ICE fixed income ecosystem, including the ICE Bonds execution platforms, evaluated pricing and analytics via ICE Fixed Income Select. By creating a single point of access for our execution platforms, customers can utilize a variety of trading protocols and manage risk. ICE supports your end-to-end fixed income workflow, increasing transparency, execution efficiency, and data access across the fixed income marketplace.
Our guests today, Guild Mortgage Company's CEO Marianne McGarry and its president Terry Schmidt, are veterans of the real estate business and led Guild through its October 2020 IPO right here on the New York Stock Exchange under the ticker symbol GHLD. Marianne has served as Guild's CEO since December 2007 and has held numerous leadership roles over her 37-year tenure with the firm. Previously, she was with Pete Marwick Mitchell and Company. And Terry Schmidt was named president of Guild in 2020. Prior to her current position with the company, she served in a number of leadership positions with Guild, including as its controller from 1991 to 1997 and as its CFO from 1997 to 2020. Welcome, Marianne and Terry, inside the Ice House.
Thank you. Good to be here.
I'm curious, Marianne and Terry, what are the main economic indicators that you both look at to assess the state of the housing market and the short-term outlook for Guild Mortgage's core business?
We look at the Mortgage Bankers Association, their forecast all the time, as well as Fannie Mae and Freddie Mac. And that gives you an indication of the strength of the housing market and what to expect going forward. But this industry is so volatile and changes all the time that it's really just an indication. Right now, the housing market continues to be strong with interest rates remaining low. The MBA, Mortgage Bankers Association, is forecasting interest rates to rise in 2022 and to be more of a purchase market. So refinances should drop significantly as rates rise, and then the purchase business will become the bulk of the market. And this bodes well for Guild because that's our expertise and where we shine.
Marianne, you first joined Guild in 1984, which was a year of economic growth really comparable to the end of 2020 and the start of 2021. What was the mortgage industry like back at that time, and what brought you into Guild?
Well, what brought me into Guild was I was recruited by a former manager at Pete Marwick to come over into the business. He brought me in to lead the internal audit division. It was an introduction into a very volatile market, and it was exciting because this business just changes all the time. That's been consistent for 37 years. So if you want to do the same work day in and day out, mortgage banking is not for you. It constantly changes, it's challenging, and it's exciting. So it kind of gets in your blood, and you think you might not be in it for long, and you just stay forever.
It's talking about staying forever. Terry, amazingly, you joined the same department, internal audit, a year after Marianne, and both of you began an ascent that have taken you to your current positions. When did you first realize that you made such a strong team, the two of you, and how did your own career develop from there?
I started actually 3 months after Marianne. So we've been together working as partners for, 37 years. And, nobody picks the mortgage business. It kind of picks you. It was just a cold interview. And right away from the first time we met, we had such similar backgrounds. We had both had accounting backgrounds. We went to the same college. We had the same professors. We worked our way through college, waitressing and whatnot. So we just hit it off right away.
What was the gender makeup in the accounting class at USD back then? And what about both of your upbringings and what your parents did steered these two women toward both majoring in accounting at USD in the early 80s?
Well, my mother was my mentor, and she gave me strength, confidence, and determination. And it was not common that someone born in 1923 received their college degree from a large university, and then she went on to get her master's, and she was a teacher and had a thirst for knowledge and felt it was critical for women especially to get a degree and create some security for the future. Knowledge was king, and she knew that would be a great path. And she believed I could do anything I wanted as long as you tried. So that is the direction I went. I selected accounting. I love math, but I chose accounting because it's very black and white. There's no subjectivity. You're either good or you're not. And the numbers speak for themselves. So I figured I'd have a better chance as a woman in a male-dominated field because everyone wants someone that does a good job. And if I made money for them and I was effective and productive and made it under budget, they'd want me on all the jobs.
Terry, did your mom play an equally large role in your career development?
Very different. I had a great middle-class family upbringing. I came from 2 older brothers and 1 younger sister. And unlike Marianne's background, I was probably one of the first females in my family that ended up with a college education. I learned young watching my brothers. They were so into baseball, football, basketball. My dad coached their little league teams, and I was always kind of on the sidelines watching. as a female. And I was like, I like this competition. This looks like so much fun. This is what I want to do. I want to compete. So I ended up getting into sports in high school and played collegiate volleyball. And that's where I really became very, very driven, very team oriented, and learning how to lead a team as well.
I mean, talking about leading teams, Marianne, you took over the team at GHLD from the CEO role from its founder, Martin Gleach, in, I think, 2007. What was his initial business idea for what was then known as Guardian Mortgage? And how did he shape the company from way back in 1960 until passing the reins on to you?
Well, he was an entrepreneur, and he was the number one builder in San Diego. So that's how he started his career. And that was his love, was building. Well, he opened a mortgage company to service his tract homes. And he was one of the first FHA, VA lenders back in 1960, as well as the GSEs, Fannie and Freddie. So we've been originating and servicing residential loans since 1960. He actually retired in his 30s. He made millions, but he kept GHLD as a viable company.
Terry, you were the CFO when Marianne was named CEO, and most of our listeners would know that 2007 was the beginning of the financial crisis, with its initial seeds coming really from the mortgage space. I mean, in fact, the canary in the coal mine probably was the failure of Countrywide Financial, which was based in Southern California, founded by Angelo Mozillo, and then sold to Bank of America for $4.1 billion in July of 2008. When did you first realize that the industry was facing this existential crisis, and what are your memories of navigating through it?
Yeah, that was really interesting times. It started kind of back in the 2005 timeframe. And towards the end of 2005, our secondary marketing group could really see that things were starting to change. The investor appetite for certain types of products was changing. And we had that traditional mortgage banking background where we were very, very focused on full doc loans. We had a really strong balance sheet. Our liquidity position was really strong. So we were in a good position, but at the same time, we were trying to do a management buyout and sell the company for the owner. So we were, managing through this crisis on one hand and trying to sell the company and find another partner on the other hand. So it was really tricky times, but I think because we were pretty conservative in our nature, we got through it with flying colors. And at the same time, when all those products came back, we were an expert. And so just everybody wanted to have a part of being in a company that had been around for many years and understood the traditional products. And so we took advantage of that. And it was a very opportunistic time for us, actually.
Yes, I want to drill into that opportunistic time a little bit because, Marianne, I'm curious how those first few years for you as CEO shaped the creation of GHLD Mortgage that exists today. Not only how you led through the difficult period of the financial crisis, but how you came out the other side with a stronger company poised for the 2010s, leading to really your recent IPO and the company's continued success.
During that time, we had such confidence and knew that we had built something special. We had a strong foundation and platform of people, technology, and process. So I knew that we could grow. Our strategy was to pick up companies, production-only companies that were having difficulty because of the financial crisis. Our plan was to take advantage of the dislocation in the market and grow. We knew we had the foundation. We knew we had the scale, and we knew we had the relationships to make us successful. We're good operators. We can support growth. We're creative. We're collaborative. And together with the right partners, we were able to take advantage of the market and grow. Our business model was the key, though. The fact that we had both origination and servicing helped us grow because we were a direct lender. So we had relationships with Ginnie Mae, Fannie Mae, Freddie Mac. We securitized our own loans, and we were able to just rapidly grow. The challenging part was getting enough warehousing lines. But we had such strong relationships with many, many banks over decades that we were able to bring in enough banks to help support our growth.
I mean, thinking about your partner on the other side of our conversation today, Marianne, how would you describe each other's leadership style? And I'll let Terry answer it after you do. And are there areas where your strengths complement one another?
We've always complimented each other, but I would say Terry is driven like no one I've ever seen. And if you wanted something done, all you had to do is tell her she couldn't do it. And she would make sure it got done. And she's creative and solution oriented. And together we made a really good team. Together, we just made great decisions. And it wasn't just Terry and I, it was our whole team. What's special and good about GHLD is that we have a great path for success for our people. I have passion for teaching and learning and bringing in new ideas. So if you're come to GHLD and you want to succeed, you have the opportunity. We always create a path for talent.
I think the biggest difference is Marianne's more of an extrovert naturally, and I'm more of an introvert. So I'm more of a behind the scenes trying to figure out what the solution looks like and what it should be. And the other journey that we were on together, we always had, each other bouncing ideas and whatnot amongst the two of us. If I had a difficult time in a certain situation, she was always there to bring me up and vice versa. And so we just complemented each other over the years just so well.
I mean, I'll tell you both that over the course of my own adult life, I think I've owned probably 6 separate properties. Marianne, in your CEO letter, you wrote that your goal is to have clients for life. How does GHLD accomplish this, and why is this an important focus when the vast majority of mortgages are 30 years, which is a long time to be locked into a customer-provider relationship already?
Well, this is a high-trust relationship business. And our mission is in neighborhoods and communities everywhere, we deliver the promise of home. And so everybody wants home ownership. It's an emotional transaction more than a financial one. So we find that trust is the key component in getting a mortgage. You may want a digital process. That's table stakes. You expect technology to be the best. That's just given in today's world. But you may not want to go through everything. And there's hundreds of programs. So sifting through everything, it's nice to have someone you trust and that you can build a relationship with. GHLD fits you into the best product for your particular needs. See, our system is unique in that we have one integrated platform from the time you take a loan until it pays off. So normally they don't last 30 years. They might refi if rates get better, or they may move up and get a bigger home, depending on their family size, or move down, whatever this case may be. So what we mean by customers for life is that we want to be there. We want to put you in homes, but we want to keep you in homes. And we want to be your partner through the life cycle of the loan. And so we have taken great steps and strides in creating a memorable and personal experience through the life of the loan. That means the trusted loan officer that you started GHLD with will always be contacting you just to see how you're doing. That's what they do over the life of the loan. But if you have a hardship, or during COVID, when you were scared about your house and what was going to happen, they reached out to their loan officer, oftentimes if they didn't get through to servicing. So we had very different ways of communicating and made sure we touched all bases to help our customers through that difficult time. We were ranked this year #1 in overall customer satisfaction by J.D. Power. So that just validated that our strategy is working and that customers are happy with us.
I mean, staying on this theme of partnership, Terry, buying a house, it's really one of the core ways to increase a family's assets. And it's usually, for me anyway, the largest purchase a person's going to make in their lifetime. And, according to what I've read, the average mortgage in 2021 has now surpassed $400,000. And being the partner for those types of transactions has to be both exhilarating, but also, challenging. How does Guild help these clients, people, younger than me, but just starting out, prepare for the responsibilities that are going to come with such a large financial transaction?
We've really specialized in multiple products, but specifically the first-time home buyer that needs more hand-holding may need some training and development as far as financial success. And we specialize in the FHA programs, VA programs, rural housing. We're number one in state housing programs. And there's a lot of local down payment assistance programs that are available for the first-time home buyer. And because we've got boots on the ground and we've got 250, 300 branches all over the country, they specialize in these types of programs so that first-time home buyer that's out looking, that needs additional hand-holding and education, we're there to provide that for them.
Marianne is the leader of a leading independent mortgage lender. What do you think is Guild's responsibility to make sure that these underrepresented borrowers get the support that they need to find this path to home ownership?
We're heavily involved with the Mortgage Bankers Association, investors, and the administration. So the good news is that this current administration is committed to finding and developing pilot programs to help the underserved markets. It's a void right now because values have increased, as you stated, and it's harder to get in those homes even if you don't have a lot of money to put down, and we take care of that piece. The monthly payment's high. So what do we do as stewards of the mortgage industry to create home ownership for the underserved and help them create wealth, strengthen the communities they live in? We
will provide some opportunity for our listeners to learn more about Guild Mortgage after the break. Guild Mortgage Company's CEO, Marianne McGarry, and Guild's president, Terry Schmidt, and I are going to discuss the current state of the mortgage business, the rising role of technology, and cultivating an inclusive and diverse workplace. That's all coming up right after this.
India has one of the strongest and fastest growing economies in the world. With a population of 1.4 billion, making energy secure, affordable, and sustainable is essential in supporting its growth. In response, the Indian government aims to diversify its energy mix, increasing its natural gas consumption to 15% by 2030. Efficient to transport, liquefied natural gas is critical in supporting countries with developing infrastructure. ICE's West India Marker LNG futures contract complements our global natural gas complex, providing essential risk management as demand for liquefied natural gas in India and the Middle East grows.
Welcome back. Before the break, Guild Mortgage Company's CEO, Marianne McGarry, and its president, Terry Schmidt, and I were discussing their backgrounds and some of the recent history over the last dozen years or so of the mortgage industry. Terry, before the break, we were discussing some of the barriers to entry that home buyers face, but a more time-sensitive issue is the current low inventory of homes coming to market. Are you worried about a slowing of construction or other factors that are affecting inventory in the housing market?
The inventory issue has been problematic for the last 2 years. And last year, 2020, the lack of inventory and the turn times of those properties being sold was under 15 days on the market, which is unheard of. It's getting a little bit better, so that's kind of changing somewhat, but it's really, really slow, and there isn't enough supply out there. There isn't enough building. It's not happening fast enough. So those barriers to entry are still, they're still out there, and those that need financing, they're up against cash buyers. And so that's making it even more problematic. And so having a lender that really can fulfill that transaction very, very quickly, can get them a credit approval very, very fast, is real critical in the world we're living in today.
Your careers span from the days where the only way that you could really see a place was an open house on a Sunday or those photographs that were plastered on a realtor's storefront window. Now we have reality shows and apps like Picasso. How has technology changed the industry, and where do you think it's headed?
Technology's changed the industry by increasing the productivity per loan officer. But like you said earlier, it's still an emotional experience. It's the largest transaction you'll probably ever have in your life, and especially for a first-time home buyer. So there's still an emotional component when it's a purchase. And purchase transactions or purchase business, unlike refinance business, creates more durable and consistent returns. So they're different. A refinance and a purchase are definitely different. During the pandemic, technology was so helpful. It helped us. It was our best year ever. And it really eased the process for our customers. So, technology is a great tool. It augments the process. And it's, there's those that never want to talk to anyone and they just want to get on the computer and do the entire transaction. And there's others that really need you every step of the way. So that's why we have the platform we do, is so that we can serve all types of people and all backgrounds. But technology absolutely supports that initiative.
Now, I scrolled through the management page on Guild's website, and in addition to you and Terry, the team includes 2 other women, 2 men. Public companies' C-suites are beginning to reflect the diversity of their employee base, but progress has certainly been slow. How has Guild been successful at promoting gender equality, and how do you ensure that a commitment to diversity and inclusion is embraced really across the company?
I think it feeds off of what you start to build. So, more than half of Guild leaders are women. And we've created a culture of inclusion and empowerment that's attractive to women and to men because of the focus on fairness. We recognize performance and results. We work to create a development path for everyone. We're committed to coaching, development, continuing education, and training.
Speaking of growth of the business, Terry, we were looking over the transcript of Guild's last earnings call, and you spoke about Guild's growth strategy. How has the company grown since your start in internal audit 36 years ago, and where are you best positioned to expand operations as you look forward to that fourth quarter call or the first quarter call of 2022?
Well, honestly, the company, for probably the first 20 years that we were at Guild, really stayed pretty steady. It was pretty steady course because the owner had retired and was really not willing to add additional capital to the business to support growth. But when we did our management buyout back at the end of 2007, we knew at that point that we needed to start growing the business and growing it exponentially. And at that time, when we had our new private equity partner, McCarthy Capital, they were very supportive in, growing the business. So right away, we started looking at organic growth, where we would add branch offices across the country, and at the same time looking at M&A, mergers and acquisitions. And we've did our first merger back in 2008. We've done 7 since then. So we've total of 8 acquisitions. And we look at it as, on the M&A side, we want to get a good partner, a good leader, somebody that has a good presence in their marketplace, and that, 1 + 1 is going to equal 3. It has to be good for both parties. Both parties have to be successful. Our M&A transactions by year 3 they usually increase their business about 30% on our platform. It's been extremely successful. And we really have kept everybody here at Guild. And so we're real proud of that. And at the same time, we're looking at how do we increase the efficiency of every loan officer within our platform? How can we get them from doing 5 loans a month to 6 loans a month? And what type of technology do we need and background to help them become more successful? We started that back in 2007 and we haven't stopped, and we're going to continue there.
You say you're going to continue. I wonder where you think the opportunities are to find, continued targets, given how many that you've already done and the way the industry has consolidated so far. Curious if you think consolidation continues, and do you stay sort of geographically connected, or do you branch out into other areas of the country?
We're always looking for opportunity. This is a large market. It's a $3-4 trillion market. It's going to go down when refis drop, but it's over 2 trillion every year. We're just a small piece. There's tremendous amount of opportunity to grow. And so we just look for opportunity and make sure that the culture aligns with ours and core values. And then it works. And so there's tremendous opportunity all across the nation. And I do think there's going to be more consolidation, and we're counting on it.
Terry, modernization, in addition to consolidation of systems, training employee bases with the skill sets that they need, it's all really a costly endeavor. Does being a public company give Guild an advantage in accessing the capital needed to continuously evolve? I mean, you talked about your private equity partners, but now you're listed on the exchange.
Oh, we definitely think so. I mean, on the exchange and having access to capital from that direction, as well as the bond markets are very, very strong and have a good appetite. So either way, we've got additional access to capital without a doubt.
As we wrap up then, let's turn our attention from technology and capital to the people that are part of it and operating the business. What impact will the past 22 months of the pandemic have on your workforce, how it's deployed, and are you predicting that an increased hybrid working conditions are going to become the norm for Guild?
When the COVID hit, we've had a diverse workforce because we've got 250, 300 branches out there, but we had to go 100% remote immediately. And we were successful in doing that with Microsoft Office and Teams. Using that technology was amazing. And we didn't miss a beat. And, our business doubled in a 60, 90-day period. So we see going forward that our workforce, they really have been successful and continue to be very efficient working from home. So we're going to keep that optionality out there. And it allows us to actually expand our reach nationally to get better talent, even though they're working remotely. The biggest challenge there is just making sure that we continue to engage our employees.
Now that everyone's remote or has a hybrid opportunity or is in the office less, it's going to require a ton of communication efforts. How do you keep yourself tethered to all the folks who work under the Guild banner, and how do you ensure that Guild culture is going to be consistent across the company given these changing conditions?
It's a work in process right now because we are a people business and have always had sales rallies and president trips and all sorts of things to bring our company together. But we've always had remote branches as well. So we're very good at communicating. We have newsletters, videos, but we always talk to everyone, touching them, in one way or another and communicating effectively. As we grow, my challenge as CEO is to make sure we keep our culture intact. We don't lose what's special about Guild. We don't get too bureaucratic, too structured. We want to enjoy the resources of a large organization, but keep the soul of a small company. And somehow we have to figure out the hybrid solution where people don't feel isolated. They still feel like they're part of something. So we're trying different ways of saying a couple days a week you come in, we have department meetings, we make sure that we have regional rallies. So we're going to go around the country next year and just touch base with everyone now that it's less restrictive and make sure that we keep that relationship intact because our loan officers need it. And frankly, I need it. I get energy from people. So I like being in the office and seeing people. And I think it just depends on the type of work you do in the company, whether or not you want to come in. No doubt everyone's productive. That's not my concern. They're all productive and accountable. I want to make sure we don't lose what's special about Guild.
Terry, as Marianne is making her way around the country next year to reconnect with everyone at Guild Mortgage in the offices that you operate really across the nation, from those offices, your loan officers are touching thousands of communities really at the grassroots level. What is Guild giving and how does it support your employees as they support their own locales?
Well, we created Guild Giving, a foundation, about 5 years ago. And what we do is we provide funding as well as paid time off to the branch offices and their employees. It gives them some autonomy where they can, really look at where in their local community do they really want to donate either dollars or time. And so they kind of work together and choose what a charity that they really want to work with. We're also trying to create with this some additional down payment type assistance programs through Guild Giving that could help the underserved and that next generation home buyer, because we all know that the Hispanic African-American families, they really need more help. And so we're working through Guild Giving to also support that initiative.
So Marianne, as we wrap up, as you get ready to hit the road next month, what do you think is next for Guild Mortgage as you continue to grow as a public company?
Well, I think we're just going to continue to improve our process, our systems, provide support to our branches, and just keep growing and taking what's special about Guild and spreading it throughout the entire nation and serving communities and neighborhoods everywhere. As to me, it's important to not just put people in homes, it's the American dream, but to do everything we can to keep them in homes. And for me, that resonates because when I was a small child, my dad became ill and we lost our home to foreclosure. So I'm proud of the fact that we do so much to keep people in their homes and, we make a difference in people's lives.
Serving our communities and neighborhoods everywhere and making a difference in people's lives. Not a bad corporate mission to have if you are running a company like that. Thanks so much, Marianne and Terry, for joining us inside the Ice House.
Thank you.
Thank you.
And that's our conversation for this week. Our guest was Guild Mortgage Company's CEO, Marianne McGarry, and its president, Terry Schmidt. That's NYSE ticker symbol GHLD. If you like what you heard, please rate us on iTunes so other folks know where to find us. And if you've got a comment or a question you'd like one of our experts to tackle on a future show, email us at icehouse@ice.com or tweet at us at IceHousePodcast. Our show is produced by Pete Ash with production assistance from Ken Abel. I'm Josh King, your host, signing off from the Library of the New York Stock Exchange. Thanks for listening. We'll talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.